Okay, so sometimes you're following a company, right? And they announce they're going public, and it's
Yeah.
like, hmm,
A chance to get in early
yeah, that IPO, that initial public offering, feels like, oh, maybe I can get in on the ground floor here.
on the ground floor.
And today we're looking at one of those, the Cuckoo International MAL Berhad IPO.
Oh, yes.
And let me get the pronunciation right from the start. It's Cuckoo, just so we're all on the same page.
Yeah, and, it's not like they're a completely new company or anything.
Right.
They've already got a pretty strong presence, especially here in Malaysia.
Yeah, absolutely.
So it's interesting to see this IPO, kind of what it means for them going forward.
For sure, for sure. And maybe for some people listening, they might not know Cuckoo that well.
Right.
They're all about, distributing and selling home appliances, household goods, that sort of thing.
Lots of different stuff.
Yeah. They've got of course, their Cuckoo-branded products that a lot of people know.
Right, the name brand.
But they're also co-creating stuff with other companies, so it's not just, their own label.
Interesting, yeah.
And it's more than just appliances, right? They've branched out.
Yeah.
They've got like the Wonder Lab and Wonder Dewy lines, which is skincare, nutrition, that kind of stuff. And they even do home care services with Wonder Clean, I think it is.
Wow, so they really cover a lot of different areas.
Yeah, 4 main segments, so it's like, yeah, you think Cuckoo, you think appliances.
Right.
But they're really trying to be, I guess, a broader consumer brand, right?
One-stop shop almost.
Yeah, exactly.
And they're not just in Malaysia either.
Yeah, that's right.
You see them in Singapore, Brunei. They're becoming a regional player.
A regional player, for sure.
Yeah.
So today, I think you've probably guessed it by now, but we are doing a deep dive
Into this IPO.
into the Cuckoo IPO.
There you go, all the info.
We are going straight to the source, their IPO prospectus.
The official document.
Parts 1 and 2, we've looked at those. Plus, there's this document specifically about how they're going to use the money from the IPO. So
Very important for investors.
huge, right? Because we really want to, understand this IPO inside and out.
Yeah.
Especially for folks who are thinking about, hey, is this a good investment for me, right? So we're going to use kind of that framework. Like, how do you pick good IPO stocks? What are the things to look for?
Those 2 criteria.
Yeah, and just really make sure you, the listener, you walk away knowing a lot about this IPO.
Armed with all the knowledge.
Yeah, and just a reminder, everything we're talking about today
Straight from the horse's mouth.
is from these documents, right? This is what Cuckoo is telling potential investors.
Right, this is their official communication.
Yeah, exactly.
Transparency is key.
Huge. And they even have, right in the prospectus, it's got these responsibility statements.
Oh, interesting.
So the directors, the people promoting it, the shareholders who are selling, they all basically say,
They're vouching for this info.
yeah, this information is accurate. We stand by it, basically, right?
That's important to see.
Yeah. And the RHB Investment Bank, they're like the main advisor, coordinator, all these things for the IPO.
Yeah, big players involved.
And they're basically saying, yeah, the prospectus is good. It tells the whole story.
Full disclosure, yeah.
So it's like everyone's really, saying we're putting our name on this.
Putting their weight behind it.
Huge. And another important thing for some investors, they say that Cuckoo shares are Sharia compliant.
Oh, okay.
According to the Sharia Advisory Council, at least as of, the date they put out this prospectus.
Yeah.
But, and this is important, they review that every 6 months, so
It can change.
it can change. So if you're, an investor who really follows Sharia principles,
Got to keep an eye on that.
definitely something to stay on top of.
For sure.
Now, about the offer itself, they're offering a lot of shares, up to 365,364,000 shares.
Oh, wow, that's a big chunk.
It is. It's like 25.5% of the company after the IPO. So, they're really opening it up to a lot of new investors.
Yeah, a good amount of the company will be publicly traded.
Yeah, and it's divided. There's an institutional offering and then a retail offering. And for the retail folks, the price is RM 1.29 per share.
So that's the price point for the average investor.
That's it.
Okay.
All right, so let's get into it. When a company goes public, what's one of the first questions you have as an investor?
What are they going to do with all that money?
Right. Where's the money going? In this case, Cuckoo's public issue, it's expected to bring in about RM 184.8 million.
A nice chunk of change.
It is. So let's see where they're planning to put it.
Yeah, break it down for us.
Okay. So the biggest slice of that pie, and it's a big slice, RM 104.7 million, that's like 56.7% of the total.
The lion's share.
Yeah. That's going to be used for capital to buy products,
Okay.
specifically for the rental business so they can expand it.
So fueling that part of their business.
Exactly, and they're planning to use that money pretty quickly within the first 12 months after the listing.
So that tells you something right there. That's where they see the growth.
Absolutely, yeah. I mean, the prospectus really emphasizes how much rental plans are growing in popularity here in Malaysia.
Makes sense. It's a good way to get what you need.
Yeah, and there's even this forecast from Frost and Sullivan that says it's only going to keep growing.
Oh, wow. So they're riding that wave.
They are, and it makes sense, right? For consumers, it's like, hey, I don't have to shell out a huge amount of cash up front.
Smaller monthly payments.
Exactly. I can just pay a bit every month, and eventually I own it.
Makes it more accessible.
Totally.
Hmm.
But for Cuckoo, it's like they have to pay their suppliers up front for those appliances.
Right, so there's that gap.
Right. They have
Yeah.
to pay right away, but they're getting the money back little by little over time.
I see. So this capital infusion will help them manage that.
Yeah, exactly. It's going to help them keep up with the demand, get more products out there for rent, maybe even get ahead of the curve a bit.
And potentially, get a bigger piece of that growing market.
Yeah, grab that market share. And they mentioned in the prospectus that this could also give them more flexibility, maybe offer a wider variety of products.
Oh, interesting.
Or even work with some new suppliers.
Okay, so it's strategic.
Yeah, it's not just about keeping up. It's about, using this opportunity to maybe try some new things.
Makes sense. So they're really investing in their rental business. That's their engine.
Yeah, that's the core.
So what's the next biggest chunk of money going towards?
All right, so the second largest allocation is for paying back some of their loans.
Okay, debt reduction. Always a good sign.
Yeah, it's about RM 40.0 million, which is like 21.6% of the total, and they're aiming to do that within 9 months.
Pretty quickly after the listing.
Yeah, yeah. And investors usually like to see that, right? Because it makes the company's finances stronger.
For sure. Less debt means less interest they have to pay.
Yeah, and that frees up more cash for other things.
Right. More flexibility down the line.
Now, there's a smaller chunk, but it's still important. RM 5.0 million, which is about 2.7%, and that's for capital expenditure, specifically for opening what they call brand shops.
Brand shops. That sounds interesting. What are those exactly?
Right. It's a new thing for them, and they're planning to open these within 2 years of the listing.
Okay. So they already have brand stores and brand kiosks, right?
Right.
So how are these different?
So the brand shops are specifically for people who want to buy stuff right then and there, take it home with them.
Oh, so immediate purchase, not just browsing.
Exactly. And unlike their other stores, which are mostly run by, contract sales managers,
Okay.
these brand shops will have permanent employees.
Also, they're investing more in those locations.
Yeah, it seems like it, right? And they're going to be bigger, too, at least 1,000 square feet.
That's a decent size.
Yeah, so they can really showcase the full range of CQQ products, their own brand and the stuff they co-create. Plus, they can stock smaller items that people can just grab and go, and they're even talking about having product demonstrations.
Oh, cool. So people can actually see the products in action.
Yeah, and here's an interesting thing. They also want to offer repair and exchange services for their rice cookers at these brand shops.
Really? That's a unique service.
Yeah, it seems like they're really trying to make it a good experience, one-stop shop for everything. Cuckoo.
Yeah, build that brand
That's
loyalty.
exactly.
So where are they planning to open these first brand shops?
Well, the initial plan is 3 in 2025 in Kuala Lumpur, Penang, and Johor.
Makes sense. Big population centers.
Right. And then in 2026, they're looking to open 7 more in Sabah, Selangor, Malacca, Perak, Kedah, Kelantan, and Terengganu.
So covering a lot of ground.
Yeah, and they chose those locations based on, their sales data and where they already have a presence.
So a strategic rollout plan.
Definitely. And then the last big chunk of the IPO proceeds is for, the IPO itself.
The listing expenses.
Yeah, all the costs that come with going public, like fees for the banks, lawyers, accountants, all that stuff.
Yeah, that adds up.
It does. It's about RM 19.5 million, which is about 10.6%.
Important to see that they're accounting for that.
Oh, absolutely. Investors want to see transparency there.
For sure. For sure. Now let's dive into some of the financials, the numbers.
The nitty-gritty.
Yeah, what should investors be looking at?
There are a couple of key figures that stand out: the price to earnings ratio and their net assets per share.
Okay, let's start with the PE ratio. What's that looking like?
So based on their profit after tax for 2023, which was RM 87.3 million, and how many shares will be after the IPO. The PE ratio is estimated to be about 21.2 times.
Using the retail price, right?
Right, that RM 1.29 per share.
Okay, so that basically tells us how the market is valuing their earnings.
Exactly.
21.2, Investors will want to compare that to other companies in the home appliance space here in Malaysia.
Yeah, see if Sikiko Cuckoo is priced higher, lower, or about the same.
Right. Get a sense of the relative value.
And unfortunately, the prospectus doesn't really do that for us, those comparisons.
Yeah, that's something you'd have to research on your own.
You would. Now, what about their net assets per share?
Okay, what's the picture there?
So they're projecting it to be RM 0.70 as of September 30th, 2024.
And that's pro forma, right?
Right, meaning it's after they get the money from the IPO and use it according to their plan.
So it's like a snapshot of their financials after the IPO.
Exactly, and it's based on how many shares there'll be after the listing.
Okay, so it gives us a per-share view of their assets.
Right, kind of their underlying worth on a per-share basis.
Another data point to consider.
For sure. Now let's talk about their business model and what they say are their strengths.
All right, what are they highlighting?
Well, they really emphasize their distribution network. It's what they call omni-channel.
Meaning they reach customers in many different ways.
Exactly, yeah. They've got their own sales force, the Cuckoo O sales team and the Cuckoo O Plus service group. They've got all those physical stores.
Brand stores, brand kiosks, all those.
All those. And they work with other retailers too. Plus they're online. They've got their own e-stores. They're on third-party platforms.
So they're covering all the bases.
Yeah, they're trying to reach every kind of customer, whether you like to shop in person, online, whatever.
Smart approach in today's world.
Totally. And they've also been streamlining things. In recent years, they've actually reduced the number of their physical stores.
Oh, interesting. Why did they do that?
Well, it seems like they were closing down stores that weren't doing so well.
Makes sense. Cut the losses.
Right. And some locations, they had trouble getting the licenses they needed, so they couldn't renew the leases.
So it was partly a matter of compliance, too.
Yeah. So it's like they're really focusing on making their operations efficient.
Makes sense. Now, another big part of their model is their rental program, right?
Huge. They offer rental plans for a lot of their products, appliances, household goods, that sort of thing.
Yeah, it's become really popular.
It has, and it's a big part of their revenue.
Okay, so how does that work exactly?
Well, instead of paying the full price up front, you pay a monthly fee to use the product.
Like a subscription almost.
Yeah, kind of. And then at the end of the rental period, you own it.
Oh, that's cool.
And they do offer the option to just buy it outright, too, if you prefer.
Okay, so they cater to both types of customers.
Exactly. And looking at their financials, the money they make from rentals and outright sales, it's a big chunk of their total revenue, like 59% to 66% in recent years.
Wow, so that's their bread and butter.
Yeah, and the rest mostly comes from after-sales services. The maintenance they offer during the rental period or for a limited time after you buy something.
Right, so they're not just selling products, they're selling a service too.
Exactly. And they're very proud of how they've digitized everything. They use technology for everything.
Oh, interesting. Like what kind of things?
Well, sales and billing, obviously, but also their supply chain, managing inventory, making sure the service quality is good, handling payments and credit, even analyzing customer data.
So they're leveraging technology to be more efficient.
Yeah, and to make things easier for their customers.
Makes sense. In today's world, you got to have a strong digital backbone.
Oh, for sure. It's a competitive advantage.
Absolutely. So how do they see themselves in the market?
They consider themselves a key player in the rental market here in Malaysia.
Okay, so a leader in that space.
Yeah, and they've actually won some awards from Frost & Sullivan, like the Malaysia Home Water Purifier Company of the Year, a few times even.
Oh, wow, that's impressive.
It is, right? It shows they're recognized in the industry.
Builds credibility for sure.
Absolutely. And customer loyalty is so important, especially with a rental model.
Right, you want people to stick around.
Exactly. So they really focus on their after-sales service.
Okay, so what do they do?
They handle delivery, installation, they do regular servicing, checks, maintenance, repairs, all that stuff.
So they're there for the customer throughout the whole process.
Exactly. Trying to build that trust, keep people coming back for more.
Makes sense. Happy customers mean repeat business.
For sure. Now, they also talk about the fact that household debt is increasing in Malaysia.
Oh, interesting. How do they see that impacting them?
Well, they think it might actually benefit them.
Okay, how so?
Because if people have more debt, they might be less likely to make big purchases.
Right, they might be more cautious.
So rental options become even more attractive.
Yeah, smaller monthly payments are easier to manage.
Exactly. So they see it as a potential boost for the rental industry.
So it's like a macroeconomic trend that could work in their favor.
Yeah, yeah. Interesting, right? Now let's talk about some of the key relationships they depend on.
All right, what are the big ones?
Well, the biggest one is their agreement with CKH, the South Korean company.
Okay, and CKH is a major shareholder in Kisiko Cuckoo, right?
Right, they own a big chunk of the company.
So what's this agreement all about?
It's called the CKH Distribution Agreement, and basically it gives Cuckoo the exclusive rights to distribute Cuckoo-branded products in Malaysia, Singapore, and Brunei.
Wow, so they have a monopoly on those products in those countries.
Yeah, pretty much, and they also get to use the Cuckoo trademark.
So it's a pretty important agreement for them.
Hugely important. And, a lot of agreements like this have an expiration date,
Right. A set term.
but this one doesn't.
Really? So it could go on indefinitely.
Well, not necessarily. There are some situations where it could be terminated.
Okay, like what?
Like if one of the companies does something that breaks the agreement and they can't fix it,
A material breach, yeah.
or if one of the companies goes out of business,
That makes sense.
or if someone comes in and buys a majority of the shares.
A hostile takeover, kind of.
Yeah, or even if something crazy happens, like a force majeure or a big political shift in Malaysia.
Those are pretty standard clauses, but I imagine the impact of termination would be significant.
Oh, huge, especially losing the right to use the Cuckoo trademark.
Yeah, that would be a big blow to their brand.
Absolutely. Now, there is a provision for a transition period if the agreement ends because of a default by either side.
Okay, so they would have some time to adjust.
Right. They'd get at least 36 months.
That's 3 years.
Yeah. And during that time, they'd have to stop using the Cuckoo trademark.
Okay.
And they could try to find other products to sell, from different suppliers.
So it wouldn't be immediate sudden death. They'd have some breathing room.
Yeah. But still, losing that brand recognition would be tough.
For sure. It would take time to rebuild that.
Absolutely. Now, the prospectus does mention that Cuckoo has been a big moneymaker for CKH.
Oh, interesting.
Yeah, so it's in CKH's interest to keep things running smoothly.
Right. They benefit from C. Cuckoo's success.
Exactly, so it seems like there's a strong incentive for both sides to maintain a good relationship.
It's a symbiotic partnership.
Yeah, for sure. Aside from CKH, they also mentioned some other important suppliers.
Okay. Who are they getting their products from?
Well, a lot of their Cuckoo-branded stuff comes directly from Cuckoo Holdings Group.
Makes sense. Keeping it in-house.
Right. But they also work with Fuji Air Group for air conditioners
Okay.
and LSK Mattress Marketing for mattresses, Transways Logistics for logistics and warehousing, and Philtech Resources for their outdoor water filters and installation stuff.
So a mix of different suppliers.
Yeah, and understanding who those key suppliers are is important for investors.
Right, because if there are disruptions in the supply chain, that can affect the company's ability to deliver products.
Absolutely. It could hurt their operations and their bottom line.
For sure. Now, no IPO prospectus is complete without a discussion of risks.
The scary stuff.
Yeah. What are some of the potential downsides that Cuckoo Cuckoo has identified?
Well, as you might expect, their reliance on CKH and that distribution agreement is a big one.
Yeah, we talked about that.
If that agreement goes south, or if they lose the right to use the trademark, that could really hurt them.
Makes sense. It's a key part of their business.
Yeah, and then there are some other operational risks, like being able to maintain and grow their distribution network.
Right, they need to keep reaching customers.
Exactly, and they need to do it efficiently. And then there's the challenge of keeping their current customers happy and attracting new ones.
Customer acquisition and retention.
Yeah, and they're spending a lot of money on marketing.
So those efforts need to pay off.
They do, they do. They also mentioned cybersecurity as a risk.
Oh, that's a big one these days.
It is, right? They rely on IT systems and outside companies to handle customer data, so if there's a breach, it could be bad.
Damage their reputation, lose customer trust.
Exactly, yeah. And then there's the risk that people don't pay their rental fees on time.
Payment defaults, that could hurt their cash flow.
Yeah, and their brand image is important, too. Any negative publicity could scare people away.
That's true for any company, but especially for a consumer-facing one like them.
For sure. Now, let's not forget about competition.
Right, the rental market is pretty crowded.
It is. They specifically mention Coway and SK Magic as their main competitors.
Yeah, those are big players.
And while the prospectus doesn't give us a ton of detail about how they stack up, there is a market research report later on that compares things like how many stores they have, their sales force size, what kind of products they offer, and their pricing.
Okay, so there's some data in there.
Yeah, but it's definitely something you'd want to dig into more, do your own research.
Absolutely. Understanding the competitive landscape is crucial.
Now, about the IPO itself, there's something called a moratorium on shares.
Okay, what's that about?
Basically, it means certain shareholders can't sell their shares for a certain period after the IPO.
So their shares are locked up for a while.
Exactly. In this case, the biggest shareholder, CKH, plus Kuban Hawk and the CEO, Ho Kian-chun, they can't sell their shares for 6 months after the listing.
So a 6-month lockup period.
Yeah, and that's pretty common in IPOs.
Why do they do that?
It's a way to show that the big players are committed to the company long term.
They're not just trying to cash out quickly.
Right, and it also prevents a flood of shares hitting the market right after the IPO, which could drive the price down.
Makes sense. Stabilize the market.
And some other shareholders have a 2-year lockup.
Even longer.
Yeah, so Tao-Sing Lee, Go-Hee Tang, Mak Wai-hong, Tan-Yu Liang, and Lai Si-lei, they can't sell for 2 years.
Wow. So a significant portion of the existing ownership is locked in.
Yeah, show some confidence, right?
For sure. What about dividends? Any plans to pay those out?
Well, the board of directors has said they intend to declare a dividend for the financial year ending 2025.
So after the listing,
Right, but they haven't decided how much it will be.
and they make it clear that it's not a guarantee.
Yeah, it's just their intention, and it depends on how well the company does.
So investors shouldn't count on it.
Right. It's not a sure thing.
Makes sense.
Yeah.
Now, what about related party transactions? We touched on that earlier.
Yeah, with CKH, there are a few things. Well, Kiko Cuckoo buys their Cuckoo-branded products from CKH, and they pay them brand loyalty fees for using the trademark.
Okay, so ongoing transactions because of their relationship.
Right, and there used to be some shareholder loans from CKH.
Oh.
But those have been paid off as of August 2024.
So no more outstanding loans.
Now, it's important for investors to understand these related party transactions.
Right, make sure they're fair and not benefiting CKH at the expense of other shareholders.
Exactly. And they do have a system for that, the Audit and Risk Management Committee.
Okay, what do they do?
They review all the related party transactions.
To ensure they're on the up and up.
Yeah, they have to be at normal market prices. No special favors for CKH.
Good to have that oversight.
Absolutely. It protects the minority shareholders.
For sure. Now, there was also a brief mention of some compliance issues.
Oh, yeah, with their distribution centers.
Right, what's the story there?
So, with the one in Penang, the layout is different from the approved plans.
How did that happen?
It seems like the previous owner made some changes.
Oh.
The landlord is trying to get it fixed, and they think they'll have the right certification by July 2025.
So it's in process.
Yeah, but there might be a fine.
Ouch.
But they don't think it'll be a big deal for their business.
Okay, and what about the Sabo one?
So they're actually using that one without the proper certification.
Oh, that's not good.
And their lease is up in April 2026, or maybe sooner if they find a new place.
So they might have to relocate.
They might, and there could be a fine there too.
Double ouch.
But again, they say it won't affect their business in a major way.
Okay, but still something to keep in mind.
Definitely. Transparency is key.
Absolutely. One last thing about the IPO, the offer for sale.
Right. Important distinction.
What's the deal with that?
So Cuckoo itself won't get any money from selling those existing shares.
Okay.
That money goes straight to the selling shareholders.
Right. They're cashing out some of their investment.
Exactly. The money for Cuckoo to grow, that comes from selling the new shares.
So 2 different pots of money.
Yeah. Important to remember that.
For sure. For sure. So we've covered a lot of ground here.
We have
The ins and outs of the CEO Cuckoo IPO.
their business, the IPO details, how they'll use the money.
The financials, their strengths, the risks.
Everything's on the table.
It's all out there. Now, the big question for you, the listener, is what do you think?
Yeah, what's your take?
Do you think the home appliance and household goods rental market in Malaysia has legs?
Is it going to keep growing?
And if so, is Cuckoo well-positioned to capitalize on that growth?
Yeah, think about their strengths, their strategy, everything we've talked about.
And don't forget about the competition. Dig a little deeper. Compare them to Koei, SK Magic. See how they stack up.
And that CKH distribution agreement, it's worth taking a closer look at. Understand the details, the potential risks.
Because at the end of the day, this is your decision.
Yeah, I'm gonna.
We've given you the information. Now it's up to you to make an informed choice.
Yeah, do your due diligence.
And if you're curious about other IPOs, other investment opportunities, let us know.
We're here to help.
Maybe that'll be our next deep dive.
We'll break it down for you,
Arm you with the knowledge.
so you can make the best decisions.
That's what we're all about.
Until next time.
Happy investing.